Ladies and gentlemen, it's What Are Your Thoughts? Good evening. And
Shalom. Shalom. Happy New Year, Josh.
Somebody in the chat, Gary, wants to know, is Michael going to be dressed up again or in a Knicks shirt? Wrong on both guesses. What is that? Is that
this
Seattle?
This is like 70s Supersonics.
Yeah,
Rest
man,
in peace and peace.
All right. And this was accidental, but we each have the we each have the compound trucker hat on.
I love them both, honestly. I love them both.
Yeah, I've been alternating Siegelman Stable and one of our two compound truckers. Guys, if you don't have one yet, idon'tshop.com.
I really don't.
In my opinion, the illest trucker cap in the game. You want to get these while supplies last. Let me say hello to some people in the chat. Chris Brown is here. Evan Beauchamp. Matt Wycheck, let's go. I agree. Biff Greebles, I see you. Who else is here? Georgie, Cam, Dave Alva is in the chat. Blake is here talking about the risk sniffer. You're damn right. We're going to sniff out some risk tonight.
Hey, what was the origin of that sniffing? I can't remember.
I don't know, but it was
hilarious.
Pretty funny. There was a chart that was called that, and I just couldn't stop laughing about it. Walter Benvin says, Josh, pounding it down here in Boca. Pound it hard, Walter. Pound it hard. That's weird. All right, we have a sponsor. Betterment Advisor Solutions. Today's show is brought to you by our sponsors at Betterment Advisor Solutions. If you happen to be thinking there's got to be a better way to grow my RIA, you're not alone.
With Betterment Advisor Solutions, we do the heavy lifting so you can focus on what matters most to your clients, from improved service that makes asset transition smoother to fast paper-free onboarding that delights clients on day one. We've built a digital-first platform designed to streamline your operations and make life easier. Now, if you're thinking,
wow, they take the paper out of paperwork, then you'd be right. Grow your RIA your way with Betterment Advisor Solutions. Learn more at betterment.com/advisors.
Investing involves risk. Performance not guaranteed.
All right. Shout out to Betterment. We like those guys. Okay. The market is. This would have been a better lead-in for us if the market had stayed green today.
The market is. What were we about to say? The market is.
I guess the market has been screaming. We took a little bit of a break today, and from my perspective, thankfully, because I don't like those 7 straight day up, moments, because you know what they normally lead to. So we took a little bit of a breather, but there are now. All right. So the question is it too good? And man, I remember reading a Jim Cramer column in 1998 on thestreet.com, and I'm pretty sure it was called "Is It Too Good?" This is a perennial problem for investors in bull markets. There are these moments where you just feel like, no, this is too good. It can't stay like this for long.
Yeah, it won't.
And it won't, and it's a perfectly natural feeling to have. And Jim was saying there was a time in the internet boom in the late 90s, and I remember him writing a column about he used to get his breakfast when he came into Manhattan from Summit, New Jersey, where he used to live. He used to come in through the Holland Tunnel, and there was a diner on the other side of the Holland Tunnel, and the griddle was 1,000 degrees. And he would watch the guy crack 2 eggs on the griddle for him. And it's you have to know the perfect moment to pull those eggs up. Because if you leave them on for 30 seconds too long, they're just burnt to a crisp and unedible. And he was comparing that to the NASDAQ, which, it ended up being true. It was just too hot. Is it too hot to put more money to work into this market atmosphere? So for starters, Mike, would love to hear your thoughts on the environment itself.
All right. So much to say. I guess I'll start here. We're not screaming higher. We're steadily grinding higher, and there's a big difference. Okay. The S&P 500 hasn't closed 3% below its all-time high since the end of April. Isn't that wild?
It's driving people absolutely crazy.
We've got May. So if you
the semis are screaming.
Yeah, no. We'll get there.
Okay.
If you got out of the market after Liberation Day, as the market was screaming lower, as it was falling through the 4, through the floor. We got that V-shaped recovery, and you're like, all right, there'll be some sort of, maybe it won't retest the whole thing, but maybe it'll, give me a better entry. Nope, no better entry. No better entry.
Like not even close. Like not even close.
Not even close. So there are pockets of screaming euphoria. There are pockets of nothingness. But I would describe this market as, I guess, frustrating if you're looking for a better entry. Other than that, it's been beautiful. No pullbacks. No screaming higher.
Unforgiving. It's unforgiving for people that insist on buying dips. It's just unforgiving. It is not giving you a chance to put money to work if I can't buy at an all-time high. Well, I don't know what to tell you.
All right. Well, so let's talk about what's going on, like front screen first, and then we'll get to other areas in the market. What's front page stuff?
Well, I wanted to say this. Sean and I keep this best stocks in the market list, which we'll talk about later in the show. We have some charts to show you guys. But we're constantly looking for where the strength is, and the size of the list will undulate based on, how good the market is. And sometimes a lot of names get wiped out all at once, like they did this spring. And then when it rebuilds, the longer a rally like this grinds higher, the larger the list can grow. We have 209 names on the best stocks in the market list, and our universe is the Russell 1000.
It's a lot.
Profitable companies in the Russell 1000. So it's not really 1,000, but like 200 of, let's say hypothetically, I don't know how many companies in the Russell 1000 you think are profitable. 900-ish.
A lot.
Probably.
Most.
I don't know. Regardless, there are a lot of best stocks in the market right now, and there's no story to tell. When I peruse the list, I look at it by sector, I look at it by market cap size, I look at it by value versus growth. Any way you want to slice and dice it, it almost doesn't matter. You got stocks working from every corner of the investment, stockosphere. It's just agnostic. If you're a stock, you're probably going up right now. And I don't think in and of itself there's a lot of meaning there, but I just think it's important for people to understand there are a lot of stocks that are doing well.
Mm-hmm.
One other thing. I got a text from a very famous man yesterday. My phone is filled with texts from famous people. This is a really famous person. And I can't say who, but I can read the text. Mike, you could probably figure it out, but don't guess it out loud, okay?
Mm-hmm.
Bear with me sorry. Oh, here it is. Okay. So I hit him. I'm like, yo, Uber hit 100. We did it, like joking around, because I've been yelling at this guy, don't sell Uber at 70, 80, 90. Great job. So he says, I haven't sold any either. Can this market continue? Everything I have is to the moon. Can it continue? And then I don't answer because I'm busy. And then the next text is, fine. What are your best three for the rest of the year?
Is this a client of ours?
No, not a client of ours.
Okay.
Like, in other words, I probably gave it 30 minutes without answering because I couldn't. It's like, all right, fine. So it goes from everything is to the moon. Can it continue? 30 minutes go by, no answer. All right, what are your next three favorite stocks? This is everyone right now, I feel like. Because even if you walk away, even if you take some stuff off, and I have personally a little bit, it's like you're still looking for all the other stuff that's going up. It's really, really hard to not participate right now. And I don't you feel like that's everybody?
Yes. If you own stocks, you're making money. I do want to point out that there are a lot of stocks that are sucking wind right now. Like there's two things are true. There are more stocks working right now concurrently than there have been in a long time, but there are also pockets of weakness, particularly those that are getting crushed by AI. The trade desk is a great example, but there's a lot of them.
I don't feel like there's a lot of them. I feel like there are a few notable ones. I don't know. That's kind of the camp that I'm in. There are a few notable companies that are as you describe. I think there's way more stocks that just look up and to the right now. I don't know. I mean, unless you have 5 more examples of that, because that's an obvious one. I agree with you. Do you have 5 more of those? I can't think of any. Are we frozen?
My internet is sucking wind. Let me close some shit out.
Oh, all right. Close some tabs because we're a little bit live here.
Verizon, you bastards, you pieces of shit.
Are you in your new house?
Can't get it right. It's unbelievable.
Are you in your new house? Are you paying up for the business class Wi-Fi?
Dude, I'm
That's
paying
a
for
no.
the quantum internet.
How's it going?
Horrendous. Worse than the stocks. Is it really that bad?
No, you're okay now.
Okay. We're back?
Yeah, we're back.
Okay.
The question was, why does your internet suck so much? I agree with you. The trade desk and some of these AI casualties are notable. I just don't think there are as many as you think there are. I think there are only a few, and you happen to know what they are off the top of your head.
All right. We'll see about that. So look at this. For example, I'm going to go look at stocks that are 15% or more below their 52-week high in the S&P 500.
Okay.
There's a lot, dude.
Hit me.
Hang on a sec. Index, not any. All right. It's not working right now. Let's just keep talking. What else you got?
Great.
That's a good
Okay.
segment.
One thing that's concerning is that there isn't a bear case. And our friend Adam Parker points out that the lack of a bear case is the bear case. And I sort of get where he's coming from, and I think I agree with him. Those are usually not the best times to put new money to work when you can't think of a reason not to, and there's nothing holding anyone back. And I sort of feel like that's where we are. So I just want to go into his piece for a second because I thought it was really good. He talks about a dinner. He's with 7 cross-asset, whatever, geniuses. Adam doesn't waste time with people who aren't at a minimum of 180 IQ. And they're all laughing like, what's the bear case? Like maybe if Jamie Dimon gets bullish, like there's almost like nothing to point to. And then, so here's what he said. Even more than not being able to address a believable bear case, it's challenging to even know what to monitor to get increasingly bearish. Investors largely know that the paradigm has shifted with regard to using valuation as a primary or even secondary rationale for security selection. As for like financial conditions, which would be another thing people would be watching, they probably tighten concurrent with a market pullback, not in anticipation of one. So in other words, that's not going to help you. That's going to be a stock market driven thing. Monitoring comments from B of A about credit card spending and consumer conditions, tracking the card delinquencies, looking at employment data from LinkedIn, card data at MasterCard and Visa. These are all reasonable approaches to assessing the consumer, but they don't enable you to pre-position for a downturn without alleviating the fear of missing out on further upside. So he's saying it's like the only two choices are you either have to admit you will be down when everyone else is down, or you have to not participate at all on the way up. And those are two really shitty choices, but we know everyone's going to make the first one. And as far as all this consumer data is concerned, he says the consumer has been solid, but slightly eroding all year. Meanwhile, the market has just absolutely ripped. The erosion didn't matter. So he comes up with we're not going to read through all these. He comes up with 3 bear cases, potential bear cases. And can you guess them without looking? What do you think they are? If you had to guess, what are the 3 bear cases that Adam would have come up with?
Not valuation.
Okay, fine. Agreed.
Well, he's smart. So I think that Adam would also not say hyperscalers slowing down their spending because that's not going to happen. They're all in. That's not a real bear case.
Bear case 1.
Oh, really? But they're
He
telling.
doesn't believe it.
But it's not a bear case because Zuckerberg said yesterday, I'd rather go bankrupt than underspend. I'd rather overspend a few $100 billion. That's not a real bear case. So what are the 3?
Allow me. Quote, many are arguing that hyperscaler capital spending could balloon further. Forget about a bear case. Some believe the return for the spending is incredibly high. This past week, one investor told us Microsoft gets its return back in 1 year. Another investor said the aggregate return on hyperscaler capital spending breaks even in 3 years, has an ROIC of 15 to 20% in year 4, and a 30 to 40% return in year 5. This means reasonable people in the investment world, in addition to those at the companies, believe that for now, even more capital spending could be justified. So he says, no way. That's the wrong bear case.
Correct.
Case 2, government deficits force interest rates to back up, which eventually hits the stock market. Quote, we are worried about this, but we don't know how to time when it will matter, and positioning for its inevitability would have destroyed returns nearly every year for 2 decades. So he throws that out. Bear case 3. This one actually I think is the big one, my personal opinion. AI/productivity boom hits white-collar employment. Quote, recent data have indicated higher than normal unemployment from recent college graduates. The truth is, we don't have a great answer for this other than every other technological innovation cycle that focused on productivity caused labor to be deployed in new and different areas. AI feels like it has the potential to be different, but for now, we think what's good for margins for the top 500 U.S. equities will probably matter much more for U.S. equity investing than long-term higher unemployment.
That's what I was going to say.
But my caveat is for now.
Yeah, sure. All right. So the 3 bear cases that he laid out, they're not real bear cases. So
he's like I think that's the point.
Right.
He's like scratching and clawing for something, and he can't find it.
Okay. Well, all right. I just want to. So I got the list. Let me ask you. Just circle back to when my computer froze. You said that the trade desk is just one example that's easy to pull from the top of the dome. Let me ask you this. So what do you think? Let's use 20%. Okay. How many stocks in the S&P 500 do you think are 20% or more below their 52-week high? So
100.
Okay. The number is 150. It's a lot.
Higher than I thought.
Almost 1 in 3 stocks are so. And if I expand that down to 15% or more, it's 203. So not everything is up and to the right. Yeah. If you're 15% below, you see that on the chart. It's 203 stocks. So this is my point. The stock market is not screaming. The hyperscalers are screaming. The semis are screaming. The fucking nonsense pre-revenue companies are screaming. I credit to you if you're making money there. That's what's screaming. Everything else in the middle is sort of blah. There's a lot of blah.
There's a lot of blah. I guess for me, the fact that it's industrials, tech, communications, and financials that are all at highs means so much more than just a raw count of how many S&P names.
You're right.
I don't give a shit about.
You're right.
I don't give a shit about all those consumer staples and fucking drug companies that are 15% off their highs. A, I don't think anybody cares. B, I don't think they're the drivers of earnings growth for the S&P. Most of their market caps don't matter. And I think if they all went to zero, nobody would even notice.
I mean, that last part's not true. But the point that you made is the right one. That the stocks that you need to be making all-time highs are. And that's all that matters.
You see that? Now, is it too good?
No, it's not too good.
For the hyperscaler part of the market, for the AI story. So this happened, last night. NVIDIA to invest up to $100 billion in OpenAI, linking 2 artificial intelligence titans. You know what this is like? This is like that episode of Scooby-Doo where the Harlem Globetrotters show up, or like Batman arrives, and it's like, whoa, what are they doing? Like, what?
Is that a 44-year-old reference? What year are we talking here?
I'm 48. Yeah, no. In the early 80s, a thing that could have happened is you could have been watching Scooby-Doo, and then like they're trying to solve a case, and fucking Batman and Robin show up. And if you're 7 years old when that happens, you have to run a lap around the block.
Yeah, like they could do that.
All right, but it finally happened. The only way this story would have gotten better is if NVIDIA is investing $100 billion into OpenAI, and Dan Ives is delivering the cash in a fucking tie-dye briefcase. Like, I don't even know what else could have made this story like a more exciting story. And the rally kind of faded immediately after, but there were some really great memes. And if you're like sensitive, now would be a good time to look away from the screen.
Hold on, before the memes, I called you that I spoke to you. Dan is the fucking best.
Oh
Excuse
God.
my language.
Literally
I was at dinner with him the other night in a 6-person booth. And there's two people. So me and Dan are middling, and the two people to the side of him are in very traditional navy blue suits, and he's in the rainbow outfit.
I love him. I love him
All right,
so much.
so let's get to the memes.
All right. I guess this is like a Nintendo joke. Yo, I heard if you press up, up, down, down, left, right, BA in San Francisco, there's an infinite money glitch. So that's Contra. How do you get 30 free lives in okay.
That.
So speaking of 80s references, but like, okay, so like OpenAI is going to spend $100 billion in the Oracle cloud. Oracle's going to take $100 billion by GPUs. NVIDIA will take that $100 billion and make an equity investment into OpenAI. And it's just round and round we go. These three companies are building the Stargate, whatever that is. It's going to be huge. Here's the next one. I like this one. This is a great meme format, underused. NVIDIA is investing how many billions into OpenAI to build 10 gigawatts of AI data centers? Because the person in the picture has never thought of a gigawatt or an AI data center in her entire life or ever will. Here's another version of the merry-go-round. OpenAI buys capacity from OCI, that's the Oracle Cloud. Oracle stock goes up, buys more chips from NVIDIA, then NVIDIA stock goes up, then NVIDIA invests $100 billion in OpenAI, then right back to OpenAI buys capacity from OCI. Look, it's not quite this neat. There's one more. Guys, get over it, all right? NVIDIA investing $100 billion into OpenAI in order for OpenAI to buy more NVIDIA chips. And I will not describe the picture. If you're listening, you'll just have to trust me. It's a funny meme. All right, so this is like not unfounded concern, because this is sort of the way the dot-com and telecom build-out in the late 90s, early 2000s came to an end. You had a lot of companies that were doing these kind of like vendor-financed equipment sales, where they would like literally give a potential customer money. The customer would take that money and buy equipment from them. So they were like financing their own growth. And they were doing it with routers, servers, storage. They were doing it with fiber optic stuff. And like it sort of like represented the CapEx boom slamming into the wall.
Yeah. So this is exactly where we are. I was speaking about this with Ben this morning. Ben Thompson wrote about this over the weekend, that this Oracle, and he was quoting somebody else, this Oracle deal going negative free cash flow and making sure that there's now leverage involved, because the hyperscalers, it was all free cash flow, and they don't give a shit.
Self-financed.
Yeah,
like
so
out of cash flows.
So now you add the leverage, you add the debt involved, and oh my God, this is a freight train. And I don't know, S&P 10,000.
Yeah, CoreWeave, put it in the Dow. Look, we had this whole thing, and I know a lot of the time I go back to that bubble because honestly, it was the greatest show on earth. It was the most insane thing I ever witnessed. But we really did have like companies like Cisco, and there were a lot of Ciscos back then. There was Juniper and Sycamore and Ciena. These were companies that were trying to sell as many routers and switches as they could into a telecom boom. The telecoms were being financed by IPOs and junk bond sales.
But this is how this is the end, right? Not
yeah,
like
that was the sign of the end.
At some point in time, once we start getting debt involved because the free cash flow can't support it, like this is how eventually it ends. And whether it ends 4 quarters from now or 20 quarters from now, eventually it's probably somebody can't make do. Make good.
But it's CoreWeave. Like, look, I missed the run up in that stock, and I really don't care. And I'm missing the new run up. I missed the original run-up in CoreWeave. When it came public, I was skeptical. It dropped. And then it ran from 35 to 183. And then it sort of had a slow-motion collapse back to 87. And I don't know if that's because of like a shareholder lockup expiry. Okay. So a lot of people were able to sell. And then sometime around the first day or two of September, it just launched all over again. 87 back to 130. That doesn't sound like a lot, but this is a large market cap company. It's $64 billion market cap, and it is just careening back and forth between double digits, triple digits, double digits. This is, for me, ground zero in this whole thing. This is hugely debt financed. Yes, in the hottest business in the world, cloud computing. Another strike against it is it's in New Jersey. Another strike against it is it's in Livingston, New Jersey, and I know everyone that lives in Livingston, New Jersey. I don't invest in companies based on Long Island. I definitely don't invest in companies anywhere around that Livingston, Short Hills area. So it has a lot of strikes against it, and if that concept of like vendor financed purchasing hits the wall, that's where you're going to see it in that stock. People are going to get really scared of that thing. What are your thoughts?
Yeah, I don't know enough about the CoreWeave specific part of it, but I would just say, again, it's really important that this is the next phase in the market. So this is from Doug O'Loughlin. This is really important. He said, okay. The implications are profound for Amazon, Microsoft, and Google. They can no longer treat AI infrastructure as a discretionary investment. They must defend their turf. What had been a disciplined cash flow funded race may now turn into a debt-fueled arms race. That's a vibe shift if I've ever seen one. Welcome to the next and newest phase of the capital cycle. I believe the Oracle quarter achieved something more elusive than just revenue. I believe Oracle has just sparked the elusive animal spirit to life. For me, Oracle is the quarter that we'll remember in history. I'm starting to think that the tariff tantrum. Anyway, he says like this is it. Oracle is going negative free cash flow.
Can you
negative
explain,
free cash flow?
Wait, can you explain for everyone what was the significance of the Oracle? So this was the Oracle earnings report last week, which took place a month after earnings season, and the stock had its biggest move ever. It went up 40% in a day, which in dollar terms is just an insane amount of money. What was it about what they said that caused that kind of a stock reaction? And why does that ignite this debt-fueled arms race when before all these companies were comfortable spending out of cash flow? And what was it about what Oracle said that makes this guy feel that way?
So one more quote and I'll tell you that. He said, compare the spending of the big three with that of Oracle. Oracle is going to go negative free cash flow to win. And it's likely that incumbents will respond. I believe it's time for technology incumbents to start spending a lot more. And most already indicated that they will.
But
on Thursday,
when what?
Hold on. Okay. On Thursday, Mark Zuckerberg was on a podcast, and he said, if we overspend by a few $100 billion, that is much less. He goes, it'll be unfortunate, but that will be much less dangerous than falling behind. So the contract that we learned about in the Oracle call, was that a $400 billion contract?
I think $300 billion contract with
and
OpenAI.
It was like $50 billion annually. And I can't remember the details, but OpenAI is only doing $10 billion worth of revenue. And they're committed to like 50 a year for the next 6 years. Whatever the number is, there is not enough free cash flow to justify it. And enter private credit or public credit, right? Blackstone's going to get involved. All of these giant pools of capital are going to get involved. And if this does not translate into gobs and gobs and gobs of cash flow, and maybe it will, maybe it very well may will, but this will be the time where we look back on and say, okay, that was it. That was like the beginning of the end. And who knows when the end can be. The end could be 15,000 on the S&P. Who knows?
But I guess I'm trying to figure out where is the cash flow that gets generated from going negative cash flow to make these CapEx investments. Is it coming back in the form of subscriptions to OpenAI, $20 a month from 1 billion people? Because then I sort of get it. Is it more like an enterprise customer spend and all of these companies are now going to take whatever spending they were doing and migrate it into the AI and leave behind legacy spending that they used to do?
Yes.
It's all of these things.
I think it's the 493 that are not doing anything, that are basically at zero. Totally rebuilding their entire stack.
In the chat, Air Max Elitist says $1 trillion spend for a new search engine doesn't seem financially responsible. So I know he's being sarcastic, but like I do feel a lot of people are like, I don't understand. It's just a software I could talk to differently than I talk to Google, and that's what all this carrying on is about.
I understand that sentiment too, but don't be so naive. Like, think about.
I think he's being a smart
No,
ass.
no,
but
no, no. But hold on.
I'm saying this is what
Hang on.
people think.
Think about what happened when we got the iPhone 7. I'm sorry, the iPhone 7. Think about when we got the iPhone. What year was that? 07? When did we get the first iPhone?
Yeah.
Could you
07, but nobody bought one until iPhone 3, which was 2010.
You never in a million years could have predicted everything that was to come. The GPS unlock, the Uber, the App Store, the Spotify's, the Netflix, maybe not Netflix. You could never ever have guessed what's coming. So don't act like this is the final version and that it's done and that that Mark Zuckerberg is an idiot and you're smarter than him. Just don't be that guy.
I said that on TV today about Jensen Huang, and like Frank Holland was guest hosting. I don't think Scott would have asked this question. Shout out to Frank, but he's like asking me, Joe Terranova, and Jim Lebenthal, like, is NVIDIA making a mistake committing to spending $100 billion? And I'm like, dude, dude, are you fucking kidding me? Like, in other words, like, can you imagine the audacity it would take for somebody sitting their ass on the New York Stock Exchange in a suit, critiquing what Jensen Huang thinks is the right investment to be making in AI?
Good for you.
Give me like, come on, like, what are we doing here? Now we could critique like the shareholder reaction, and of course, there's like room to discuss like whether or not the stock reacted well to it. I would argue it did not. I think if that announcement came 6 months ago, NVIDIA would have gone right to 220, and NVIDIA did not. It reversed. I think it had a weak day today. That could change because it was down 3% today. That could change because Micron just had great earnings after the bell, but NVIDIA had this huge pop on that news and then gave it up.
All right,
like,
market's open tomorrow too.
All right,
but this anyway. The point is, I know we're going long here. The Oracle quarter and what's happening now, because I feel like we've been saying the same shit every week for the last, I don't know, 6 months. This was an inflection point. So, all right.
Wait. Before we move off of this, the question is, what do you do? So my opinion, and then I want to hear yours. You do not buy any more AI unless you're willing to trim some of your other AI. In other words, for me, I'm not telling other people what to do. I will not commit more dollars into the AI theme unless I'm taking profits from something that's already gone up a ton. I don't want to keep
pushing
the chips out.
What is the AI theme specifically?
Well, I guess at this point, it's probably half the NASDAQ 100. It's all the utilities and the natural gas transmission companies that are related to the build out. It's the industrials that are digging up ground and assembling all of these new data centers. It's a really big theme. And I guess from my perspective, I'm glad I'm in it. It's done really well. A lot of stocks have gone up a lot of points or percentages for you. And that's great. I'm not looking for my 12th AI stock. And if I find one that I really want to be in, I think my argument would be, okay, but the money's got to come from somewhere. I am not going negative equity to win the AI race as a common stockholder. I'm not willing to play it the way that Oracle is willing to play it.
Yeah.
What do you think is the answer here?
Man.
Shut up and buy.
I don't know. No, this is the fun part. I don't know. This is like what we're doing here talking about. I don't know what the answer is for everybody, but
another answer is focus less on valuations and price targets and all that old school shit, and maybe just focus more on your own position size.
Hang on. I hate this entire conversation because specifically it's like, are we talking about your brokerage account? Like,
No,
I hope we're
to
talking.
you.
I'm just saying. I hope the listeners, like, we're talking about like if you have a fund trading account, right? This is not like this is not financial advice for your retirement account or anything. I'm talking about your if you have a stock trading account.
It's self-directed, or you work with a broker and you've got 25 stocks in your portfolio. Should you be looking for a 26th stock, and your whole portfolio is like Micron, Broadcom, NVIDIA,
Probably not.
AMD?
Right now, no, of course not.
So that's how I feel. And if you come across something that you feel like, all right, this is going to be the next phase of the AI trade, that's fine. Maybe lose a little bit of Microsoft then.
Yeah.
Maybe lose a little bit of Meta.
Okay. So it is a very interesting market. we have on the one hand, and like the market, the participants, there's so many different storylines and areas of the market. You have the American Association of Individual Investors that we've spoken a lot about, not participating in the Euphoria. You have Charles Schwab's quantitative. Literally, what are the clients doing? This is not
This is my quant.
This is not
quantitative.
this is not a survey. What are the clients doing? They're not very bullish, like at all. The last 5 months, it's been sort of flat. And then you have, of course, you have this one corner of the market. So I opened up my Twitter and I saw Buco Capital, who is one of the best accounts on the platform, in my opinion, tweet, and he nailed it. My feed is just retail investors posting screenshots of literal millions in gains from unprofitable and even zero revenue businesses. And then some fundamental investors slowly going insane, screaming into the void.
When have you seen that before?
I saw
2021. 2021.
You know, the original, somebody tweeted this. I can't remember. It was so good. This is like 2016 about people just screaming, professional investors screaming into the void.
This is 2021.
Okay. So the people that are now, forget Schwab and the AAI, talk about young people that are into trading, the Robinhood, like the retail investor. When you think about them, they're on fire. They're absolutely on fire. So Goldman Sachs has a basket. So chart on, please. This is from Sherwood, Luke Hawa. Luke said a Goldman Sachs basket of stocks widely held by the retail community is going straight up and to the right, poised for a record 10th straight day of gains.
Look at that bar. The bar is the number of days.
Consecutive days. It's up 13% over a 10-day period. Now, Liz Ann Saunders, and I'll stop talking in one sec, Josh. Liz Ann Saunders tweeted, the meme stocks are up 73% on the year. And credit to us, we created a DGen DAO. Unfortunately, it's not investable.
Should've bought it.
Chart off for a sec, John. I just want to set this up. So we first unveiled this in December 2024. And we were like, listen, if this is the top, we'll own it. Our bad. Sorry if this is like negative juju, bad vibes.
People were mad at us.
Okay. The DGen DAO is up 67% year to date. And interestingly, a lot of the names that I would think are in the meme index, a lot of those things are not in here. So we have, look at that, up 67%. And
holy shit.
It got, so even more impressive than that, it almost tripled off the lows. So here's the thing. You have hyperscalers going berserk, the AI trade, and then you have all of these not even unprofitable names, although yes, they are unprofitable. In some cases, you have pre-revenue companies. So Josh, you know what's going on with Oklo, the nuclear company?
The mini nuclear reactor company that Sam Altman is invested in.
So this company
honestly, it looks like they just invented GLP-1s.
So the stock is going straight up. It's up 1,500% over the last year. Whatever. It's a $20 billion market cap, no revenue.
Yep. Why would you need revenue? No revenue.
No anticipated revenue next year. Maybe in year 27. And they speak a lot on the call about the administration and data centers and nuclear energy. And listen, investors aren't stupid, okay? It is going up for a reason. And not only are the people that buying it not stupid, now maybe some of the people that are buying it today are stupid, but credit to them. If they made money, making money is not stupid. I don't besmirch these investors. In fact, making money is the opposite of stupid. However, I got a text from my brother-in-law who is an artist, okay? He's an artist, he's a musician. He doesn't ask about the stock market, and when he does, I pay attention. So he said, my dad made some adjustments to my portfolio. This is on Saturday. Recently, and asked me to pass along a question for you. He purchased shares of Oklo, a startup working on nuclear reactors to power AI.
Adjustments to my portfolio.
Since then, the stock has got up about 20% in my account. He's curious if you have any perspective on Oklo specifically or more broadly on the rebirth of the nuclear industry. So I said, oh boy, LOL. I was just looking at this. So I said, I haven't done any work here, but, and I'm just showing him a few tweets.
Yeah.
Somebody tweeted, I shared this with him. Here's a tweet from Sad Value Investor. My boy who thinks that Oklo is almost the same size as NVIDIA because the share prices are similar is up 200% this year. All right, let me read that again. My boy who thinks that Oklo is almost the same size as NVIDIA because they have the same share price, his account is up 200% this year.
You know how frustrating these moments are for people that know anything? The more you know, the worse you're doing right now.
Correct. So to Buco's point, so here's what I said. This is a speculative mania. It's a $20 billion market cap. I have zero insight into the fundamental hope driving these moves, but it's wild shit. Doesn't mean it has to stop going up tomorrow. But yeah, ride the wave, but don't risk more than you could lose. I hate talking about this type of stuff I'm not educated on, but this type of vertical move higher usually ends very poorly. So again, if you just have a few bucks in this name, then by all means, who cares?
You have $1 million portfolio. Maybe you could just take $10,000 and buy VIX call options, December or January strike, and just wait for some fucking shit to happen. And that's like if you want to buy insurance because your portfolio is so much and you have so many of these names, and you can't believe how much they're up. If you want to peel 10 grand, 1% out of $1 million portfolio,
1%.
do it. Yeah.
Oh, I'm sorry. You're right. No, 100% right. Yeah.
Take
Fine.
1% of a $1 million portfolio. Buy VIX 25 calls.
Oh,
don't even look at the premium. Forget whatever it is. Doesn't matter because if we get one of these swift 10% ass kickings because of how insane things are right now, you're going to be thrilled that you did that. It's not financial advice from me to you. I'm speaking rhetorically. I don't know you. I don't know anything about you personally.
So Tyrone just texted us a text that he got this morning. Good day. How do you feel about Oklo? Like everybody knows, everybody's in.
It's the new Palantir.
Sure. So all right. So I've said this now several times.
Put up the DGen DAO real quick. We don't have this one,
correct.
Do we?
So none of these
what
things
the
are
fuck?
In. We don't have Ionic in here or IONQ, whatever it is. We don't have the quantum computing, the Rigetti.
What's Ionic? That's the quantum computing.
And QUBT.
What do we have in here that needs to be?
We don't have we don't have Rigatoni. Get DraftKings out of here.
We don't have Rigatoni.
We don't have Rigatoni. DraftKings might as well be Apple at this point. Get that out of here. We need to take it.
Dude, I just realized you're not a Sopranos guy. It's like one of the best ever.
Bad.
One of the best ever Anthony Jr. lines.
My bad. What was the line?
It's like a fight at the family dinner. No. It's like a family fight at the dinner. And he's like 8 years old. He goes, what? So no fucking ZD now?
All right.
What's Rigatoni? Rigetti computing?
Rigetti. I want to end with this. It's really hard not to see this nonsense, all of these unprofitable and in some cases pre-revenue names going up 20% a day with a $20 billion market cap. It's really hard to see that happening and not want to take all your money out of the market. However, this is the world that we live in. This type of activity is not going away ever. Get used to it. This is the game now. Don't let it distract you from the fundamentals and the reality that this is a legitimate bull market, and this nonsense is just going to happen when there's risk appetite. You're going to see this type of moves. Get used to it. Last point. Throw up this chart. I asked Sean to make me a chart. Great work, Sean. Chart off, please, actually. Let me set this up. I said, Sean, how many plus 1% days have we seen in the equal weight since July? I just picked a random date. And he made this chart. Look back, please. Chart on. So we've had 7 1% days for the equal weight index since July 1st. That's 59 days. So Sean zoomed out and made a 59-day window and looked at
very normal.
And this is normal. This ain't nothing. Yeah. This is nothing. So when you say we're screaming higher, it's a speculative mania. Yeah, in some places, but this is nothing.
I mean, we're gonna now mass produce mini nuclear reactors, like igloo cooler sized nuclear reactors.
Dude, they're gonna be in your ear.
Can I have one in my backyard? Look, I know we're joking. All of the CapEx spending, the trillions of dollars in CapEx spending for data centers, it's worthless if you can't power the facilities, and you literally cannot power the facilities with. And Michael Sembelis explained this to us in many different ways on many different occasions. You absolutely cannot light all of these facilities with the current energy infrastructure. There's literally no chance that you'll be able to do it. It's not going to be wind. It's not going to be solar. You literally need something that's nuclear. Now, do we want to build 10 more 3 Mile Islands in this country? I don't think there's the appetite for that. So the Oklo bull case and all the uranium stocks, I totally get it. And we talked about this with Jan Van Eck, and they have an ETF that owns all this nuclear stuff, or all the miners. Okay, so I totally understand the story that almost you can't have the AI projections they're making, the usage projections. You can't have them if you don't accept the fact that there's going to be a heavy nuclear component. So fine, I get it. I still don't want the exposure to it because I'm not convinced it happens in a linear fashion, like in a straight line. And if I miss, I miss. But I can envision a scenario where these stocks are all cut in half in the course of 20 days, and people are
why
like,
not?
holy shit, what just happened?
I'm looking at for VanEck. When I was on, did he say this was their biggest one? Oh, NLR, is that the one?
NLR, nuclear. He
Dude,
said
three-
it was their
$3 billion
biggest inflows this year.
This thing has $3 billion in assets.
Probably all in the last 12 months.
So anyway, in conclusion, it is a fun and interesting and boring and psychotic, insane market all at the same time. There's a lot of
Yes.
different things going on.
Okay, here's something interesting. We got an update to the OECD global growth outlook, and it turns out that a lot of our worst fears about tariffs really just are not showing up in the way that they were expected to show up, not really serving as that much friction. And, we're hearing once more, well, you haven't felt them yet. All right. So, but definitely I will. Like at this point, right?
Is that what they're
It's
saying?
It's a little bit like waiting for, it's like waiting for Godot. And I don't know, do you know the reference? So Waiting for Godot is a famous play. It's horrendous by 21st century standards, unwatchable. The point of the play is that nothing happens. It's two characters having a 2-hour conversation that just goes in circles while they're waiting for somebody to show up for some reason. Godot never shows up. Spoiler alert. It's a complete fucking waste of time. But I guess for people in the late 1800s, this was like the height of entertainment. Anyway, waiting for these
Sounds
tariffs.
riveting.
So, yeah, no, it's amazing. Waiting for these tariffs to like show up. It's a little bit like waiting for Godot. We're just talking ourselves in circles. But let me quote a few things, and then I want to hear what your thoughts are.
Okay.
The OECD now expects global growth of 3.2% this year compared to the 2.9% expansion it had forecast in June. Global growth was more resilient than anticipated in the first half of 2025, especially in the emerging markets. The full effect of tariffs is yet to be felt. However, we are warning of significant risks to the economic outlook. That sounds like they put that in every report.
That's a Grand Rapids hedge.
Big time. That you could just automatically include that. But what's notable is that they are now raising the global outlook and the U.S. outlook for GDP. The OECD now expects headline inflation to amount to 3.4% across G20 countries, slightly lower than June's 3.6% projection. So they are reducing the tariff shock inflationary pressures that they were worried about and raising the global economic growth. And one last thing that I wanted to pull out. Let me see if I can find it. Oh, growth expectations for the U.S. alone went to 1.8% for 2025. The June estimate was 1.6%.
All right, enough.
So all right. But so like that's the backdrop. So you talk about a lack of a bear case.
Yeah.
This is not a situation where the global economy is teetering. We're getting rate cuts and they're raising growth expectations simultaneously.
All right.
Think about that.
I'm liking. I don't think that this is just a U.S. phenomenon, although it's probably more pronounced here. This K-shaped economy that we live in, it is what it is, and obviously, like the fabric of our society part. Let's not talk about that for a second. Just purely the economic ramifications, okay? Purely economic. The people with money have so much of it, and are spending so much of it, and I don't know what stops that.
Stock market crash.
Yeah, and
Nothing else.
It's circular. It's circular logic, right? Like as long as they keep spending, the stock market will keep going up and up and up. And it's the meme that we were talking about earlier.
But you made the most important point that it's not a U.S. only phenomenon. I follow a lot of celebrity DJs, and these are people that go around the world playing parties. And depending on the time of year it is, they're going to the same spots because that's like where this global elite class is gathering. And sometimes the top 1% in the world, sometimes like the top 10%. So Ibiza is not all 1% or global 1%ers. It's just the place to be. But this is like a migrating party. It's the same people. They go around the world, and it's one point of the year they're in Saint-Tropez, then they're in Monaco, then they're at the F1 race in Miami, the F1 race in Austin,
Is it Monaco or Monaco?
No, it's not. But like they're in St. Bart's at the end of the summer. It's like this thing. But like the amount of people who have the money to be at these things at this point is like what I think has changed. Like imagine like these velvet rope opportunities to go to these places to see like fucking Marshmallow DJ or something.
And you can't get in.
Right. It doesn't matter how much money you have. You can't get in because the sheer amount of people who have the money to do this has exploded. And I think that that's
and
really
it's not
what's
dead.
changed.
And it's not dead. It's equity. We've got equity and cash.
It's equity.
So
you know I'm a wealth effect guy.
I know.
So you ask me, like what changes this? I just think it's the stock market. You get another 2022 without a V-shaped recovery at the end. That's what changes this.
Sure. Yeah.
But like,
dude,
you want to like bet on that happening?
No, dude. It ends. It ends when it ends. It'll right. Like I don't know. That's it.
True. All right. One last thing on this. Powell spoke today in Rhode Island. Neil Dutta had an instant reaction. We could put this up if we have it. In Powell's speech, two things stood out to me. First, the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. Second, quote, the increased downside risks to employment have shifted the balance of risks to achieving our goals. So Neil is saying policy still be characterized as modestly restrictive. There's reason to expect Powell to be on board with rate cuts at each of the next two meetings. So like assume Powell's pivot toward being more outwardly concerned with the labor market versus inflation, another 2 rate cuts. Last thing, I'm seeing a lot of versions of this chart going around. Put this up. Have you seen one of these yet?
I have not. I hate these charts, but what's your
that's
point?
That's why I'm pulling it out for you. 2018 versus 2025. We had this really scary dip earlier in the year in 2018 when the tariffs started. Then we had a big recovery in the S&P, and then in the fall, the wheels just completely fell off, and the market crashed into Christmas. And a lot of people are taking that action, and they're plotting this year. Now, obviously, there were more differences than similarities, but I wanted to just...
this is criminal.
I wanted you to get a little fired up with this because I've seen a few versions of it.
This is criminal. Show me the percent change. That's horseshit.
No, because that ruins it. The percent change actually is not that bad.
Yes, it is. Truth. No, it's bad.
How much was the April? How much was the April correction? 19%.
Is that all it was?
I think the March correction in 2018 was 19%.
Oh, really? Because I remember March was 19. It was only 19 this time around. All right, maybe I stand corrected. Either way, so what? Lines can only go 2 directions. Okay, they can go up, down, and side. 3 up, down, and sideways. Shut up! This is nonsense garbage. All right, next topic. So I want to go through this quickly because it's enough already. But Josh Schaefer tweeted this chart from Savita Subramanian, and she said, since 2023, consensus has been overestimating earnings growth for the 493, while underestimating growth for the Mag 7. It's just remarkable. Like the dark blue lines, the forecast has continually come in lower than expectations. They've been underestimating and overestimating on the light blue line. It's just remarkable. Remarkable. Next chart, Todd Sohn. Semis. Holy shit.
They're 15% of the market now?
Unbelievable. Broadcom is larger than Meta? What in the world?
Not for long. You know, the thing about market tracking changes in market cap or dollar amounts in market cap, man, that overnight. You're right. We've seen hundreds of billions come out of Apple at the drop of a hat.
So perfect segue. Next chart, Apple and Nvidia, now 14%. 14% of the S&P 500. Wow.
The two stocks combined are 14%. What is it? What is the thing we used to talk about where like AT&T and
so
General Electric
so this
were
was
20%? in the 1960s or 50s?
No, yeah, it was. Man, in my head, I think it's like 17%. And we're getting there. We're not too far away.
It is right.
It's wild.
It's there.
All right. However, all-time highs everywhere for the first time in a while. The Russell 3000 spent years underwater. So finally, we got the Dow, the S&P, the NASDAQ, and the Russell for the first time since 2021. All right. I've said this before. It's like there's so much data and information. It's really easy to paint any picture you want about the market. I mentioned earlier, and it's fine. There's nuance involved. It's not black or white. I mentioned earlier the euphoria in that segment of the retail market, which is, let's call it what it is. And I'm not mad about it, but it is euphoria. And then other places in the market, it's like, sort of yawn. So Urian at Fidelity, Urian Timmer, he's talking about lack of froth in the market. So Urian says another sign of froth in the market would be a surge in IPOs and M&A activity. So far, there are no signs of this. The chart below shows that IPOs and secondaries remain at average levels and far below the extremes experienced in the easy money liquidity bubble in 2021. Chart on, look at this. So the purple and blue lines at the bottom, that represents IPOs and secondaries, and nothing compared to that period.
I have a counterpoint to this. Would you like to hear it?
Sure.
Okay. We don't need new IPOs for that to have that froth.
Agreed.
We're dredging up the old IPOs that were broken.
I agree. You're right. You're right.
Open Door, all the shit Eric Jackson's doing with I don't even know what those stocks are, but those were 2021 vintage IPOs. When you have a stock at $2 that runs to 10, there's no need for there to be a wave of new IPOs because we have the old ones. I'm in Joby and Archer Aviation. These are 2021 vintage bubble stocks. But they've made a lot of progress in their business over the last 4 years. But that's what's replacing all of that supply. But then we don't have a bubble in IPOs, but shit, we got CoreWeave this year and Circle, and we got a bunch.
Right. All right, so next chart shows M&A activity or lack thereof. It's almost fallen off a cliff. Not almost, it has fallen off a cliff. But Josh, to your point, you're right. U.S. IPO activity picks up after Labor Day. September's strong start stands out for recent years. That's Bloomberg. So we are getting more IPOs, but you're right. You're right. I think the context that you give around Urian's lack of IPOs is important. So there you have it. More of that. And then lastly, do you have anything else? Let's wrap up. The AI glasses.
We got to do. You want to do?
Real
give
quick,
me 30 seconds on the AI glasses.
So Meta is really going for it. $800. It can show text messages, video calls, turn-by-turn direction and maps. They predict that Meta will sell over 100,000 units. And so
when?
100,000 units by the end of next year.
All right, this might end up being my worst take, and Nicole can save a copy of it. I think these are for virgins, and I don't think they're selling 100,000, and I don't think it's socially acceptable, at least not yet, to walk into a room wearing glasses with fucking cameras on the front of them. And now, could that change with Gen Alpha? If they start,
yeah, I agree with you. I totally agree with you.
It could. For people in my demo, don't step to me with this shit on your face.
Don't worry. I don't think anybody's going to. But I agree with you.
Okay. All right. Let's make the case. I wrote this up for CNBC Pro with Sean. We talked about at the end of the show last week about these energy stocks. They were ripping again this week, man. I'm telling you, there's something percolating here.
I don't own any of these.
Okay, this is the worst corner of the market. I'm going to show you the best stocks. I have 5, and we gave these letter grades. Let's roll through these. Valero. This is the best one. This one, for some people, they'll look at this and they'll be like, God, I missed it. And I get it.
Disagree.
I get it.
What do you mean?
I know, but I understand it.
No, I don't. No, I don't. I reject that. This thing has gone sideways. This thing went sideways for a year. It's only starting to move.
Okay, another refiner, Marathon. Pull this up. This one looks even better. You buy this, right?
Yeah.
Yeah. Here's Baker Hughes. If this one takes out 50,
I feel like the stock never works.
It never works, but it sometimes works. If this one takes out 50, who's selling it?
Okay.
Who's selling it, honestly?
Yeah.
This is not a refiner. This is oil field services, and they have done a really good job managing
Don't give me fundamentals, dude. You don't know shit. Next chart.
Thank you. Phillips 66 is the other refiner. This is the one that hasn't broken out yet. It's the juiciest.
Ooh.
It's juicy, right?
Yeah, I like it.
Because if you like the marathon chart, this is the marathon chart, but 3 weeks ago.
Yeah.
You understand?
Yeah.
Okay. And there's an activist. I think Elliott is in this stock in size. So I thought that was an interesting one. I do own this one, Chevron. I'm finally green. I got murdered in this stock when I first bought it. Take a guess where I bought it.
Yeah, I can
on this chart.
I mean, that did look clean.
I know it was a failed breakout because of Liberation Day, but I averaged down and I survived. I don't trust it, so I think it's a good dividend stock right now, but I don't think this one's going to go. So I gave that one a C. Anyway, my make the case is time to start looking at energy stocks again. I know there have been a lot of false. There's been a lot of false promise in this space, but someday you're going to wish you did, and that's my story.
Okay.
You got a mystery chart for me?
I do. All right, so let's go. Let's chart on, John. All right, we're looking at a 1 year time frame. All right, I'll give away the orange line. The orange line is an index. It's the index. And the purple line is another index in a different area of the world that you'd be surprised that it's beating our index.
Okay, this is Chinese internet is purple, and the orange line is either the NASDAQ or the XLK.
So the orange line is the S&P, and the purple line is not that. Let's zoom out a little bit.
I did really good then.
Let's zoom out a little bit. This is a tough mystery chart, but
can you give me something else?
I will. This is 5 years, okay? So would you say that 5 years is not cherry picked? It's 5 years.
Yeah, these are the same chart.
It's 5 years.
Almost perfectly identical. Not perfect, but almost.
All right, the purple line is basically the opposit of what's
international European banks versus the
all right, close
XLF.
enough. It's international value. Isn't that wild?
I'm really good at this.
No, it's a tough guess. But I only just want to show you, isn't that very shocking?
Wait a minute. How was I supposed to guess the Fidelity Series International Value Fund?
I told you. It's International Value Index. I told you it was a tough one.
This is not guessable.
Okay, my bad. I'll lay you up next time. This is not guessable.
No, but you have to say it's an investing style.
All right, this is not guessable. Forget it. My bad. But isn't that wild?
Will you see the shit I pull out for you next week? Penny stocks. Fucking bulletin
Isn't
board
that
stocks.
surprising? International Value has outperformed the S&P for 5 years.
I would not have believed it if you didn't show me the chart.
Sway?
I think the foreign banks would probably be the key to that. But who knows? Maybe I have no idea what I'm talking about. They have a lot of miners, and gold is up a lot. Maybe that helped.
Sure. I don't know. Value.
Biff Griebel says, as a wealth manager, I should have memorized all mutual funds. All right, guys, thank you so much for hanging with us today. We really appreciate it. We miss you when we're not here. Thanks to everybody who joined us in the chat. As Michael pointed out, it is a wet and wild market. Obviously, some things will end badly. That doesn't mean the whole thing needs to end badly. Stay focused. Do what you think is best for your own long-term investing, and do not fall sway to the madness of the crowd. Tomorrow is an all-new edition of Animal Spirits, my favorite podcast, starring Michael Batnick and Ben Carlson. Listen to the koala and subscribe, as you can see on screen. We'll do a new edition of Ask the Compound, and then end of the week is an all-new Compound and Friends. Keep it locked. We'll talk to you soon.